to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main, president of Main Financial Group, as well as joined by Adam Freund, partner at Main Financial Group. To our viewers at home, we know that you're thinking about the retirement years, but are you thinking about some of the fears that come up in the retirement years? And there are three that we're going to talk about today. Number one, the fear of running out of money. That's a big one. Fear of making mistakes with your money. Also, taxes. And what about making mistakes when there's less time to recover? Talking a little bit about that. So as you're entering the retirement years, we know that fear is pretty much on a lot of people's minds. And we want to spend some time talking about that today. But the best part, what are the solutions? We're going to give you the solutions as well, because this show is all about bringing you peace of mind in your retirement years. So viewers, thank you for being with us. Jordan, how are you?
I am great. How are you? Happy to be here.
I'm so happy to be here. I'm doing great. Thank you for asking. And Adam, how are you?
Well, I'm a 1 in a million type of person today, which means there's 1,000 just like me in China.
Interesting. And what would their names be? Still Adam?
Oh, yeah, all Adams.
I'm still trying to do that math.
A billion, 1 in a million, everybody. Good.
I just love it.
And how about you? How are you
Fabulous.
today?
I'm always happy when I'm with the two of you.
Aw.
So I look forward to it. I love our time in the studio. And I think the shows are so amazing because today...
There's that $200 we said
gosh,
when you said that. When you
Viewers,
said that they like being with
I got
us.
a pay
There's the
raise. Yay. So 3 biggest fears in retirement. Let's talk a little bit about those because they're so important to uncover and giving the solutions. But before we dive in, gentlemen, when you think about retirement, do you picture more freedom or do you picture more structure? Jordan, I think I know your answer, but I'm just going to let you answer.
I think structure gives you freedom, right?
Yeah.
I mean, I definitely I'm a structure person, right?
Yes.
But I think structure gives you the freedom to do whatever you want. But I couldn't imagine not having financial structure when you get into retirement.
Yeah.
Okay. Adam?
I know that's going to surprise you, but structure would be my answer.
I
as
would
well.
not have thought that.
That
I
does
thought you would.
surprise me.
No, I need to have a purpose. And I think having a structure has a purpose. I think it's why the Shermanator at 87 still goes to work every day.
But Robin says you take the garbage out once a week. That's your purpose.
Well, that is once a week, yes. But sure, we make Shermanator go to work in the coal mine. So that's why he works. No.
No, we're going to have Shermanator on here. I'm sorry.
One of these days, I know we got to do that. And at 87, we don't have that many days.
For those of you that are new turning in, that's Adam's father, 87-year-old father, who's our business mentor here at Main Financial.
Consigliere.
Yes,
yes.
And an excellent golfer, I've heard.
Oh, yeah.
Yes, that is true. He still golfs every week. Well,
that
not in
is
the winter.
fantastic. So how would your dad answer that question? Is his retirement, does he enjoy having structure during his day? Does he enjoy freedom? Okay.
No, he is absolutely a structured person. He wants, I'm the same way. I want to get up at the same time every day. I like my quiet time. I would love to have the freedom to read more, but I think Jordan's right. With structure comes that freedom.
Yes.
And what about you?
I'm structure. I like to have structure. I like to have a plan.
We should all do a show together.
We're kind of boring. We all said that. All right. Well, when you think about it, talk about expectations versus reality of retirement. Do you picture more freedom, more structure? I mean, is that a question that you ask when people come into the office?
Well, we spend a lot of time in the beginning meetings talking about what they like, what they don't like in their current financial plan, and then what their dreams and their goals are. Because living here in Michigan, there's a lot of different ones. We have what are they, snowbirds?
Snowbirds.
Where they go warm for half the year. We have other people that are skiers. We have other people that are surrounding their retirement around grandkids, which can be a little dicey and challenging, especially as kids in corporate America move around and such.
Right.
So there are a lot of unique things that come into learning and understanding our clients before we can create a plan that fits all of their needs and goals.
Yeah, understanding that is paramount.
Most definitely.
Yeah, and I think, the two biggest concerns that we see when people come in, or at least two, the top two in my opinion, are, what if I screw up and live too long and run out of money?
Yes, I was going to ask
And number
you that.
two, what if I don't have enough income to keep my lifestyle? That's one we don't talk about a lot.
No.
Okay, I can stretch my money out so I won't run out, but wait a minute, I want to do the things that I want to do or even more. for years we've referenced the pickleball industry.
Yes.
Right,
yes.
in retirement on this show.
You have referenced it.
I mean, the multi-billion-dollar sector now,
Yeah.
and the orthopedic surgeons love it from all the
Yeah.
blown out knees and legs of these retirees. But that is a huge fear too, to say,
Yeah.
okay, I'm going to retire and I'm not going to run out of money, but what if I don't have enough income to do all the things that I want to
That they
do?
want to do. Absolutely.
Makes perfect sense.
It's great when we can tell people they're going to get a raise actually in retirement.
Yes.
So that's another thing that has changed over time.
Well, ROI changes in retirement, right?
Right.
And we talked about that in previous shows. But ROI before you retire is return on investment, right? But what is ROI in retirement? Reliability of income, ROI. It really is an emotional change in your psyche to say, all right, I've got to switch from accumulation and return and growth, return on my investment, to distribution planning and wealth preservation planning, and not screwing up and making a bad choice. And I think in your opening remarks, you said that making mistakes were one of the fears we're going to talk about today. And that's so true. Making a mistake in retirement is really spotlighted and amplified and can be a lot worse than in years before.
Yeah, you take a stumble all the way down that mountain, and you don't want to do that.
Most definitely. So when you're speaking of some of these fears, I have to ask you, what actually helps reduce the money anxiety that people can feel? Because obviously, even people that have saved a lot, they're still feeling anxiety. And we talked about why running out of money is a huge concern, obviously. But what helps reduce that anxiety?
There's a number of things you can do. One thing, you can stress test your portfolio.
Okay.
Think about that. So you can take your financial plan, your retirement plan, your portfolio, and you can stress test it. You can push it to the max. A lot of our software can help you do that to see how long will this last before it implodes with different scenarios.
Yes. Right.
Market returns, market losses, increase in taxation, increase in healthcare. That's what a financial plan can do. So stress test your plan. That'll give you peace of mind, right?
Yep.
Okay.
We preach it time and time again. The next way is income allocation, right? And that's dividing buckets out, that these buckets of money are only for income needs, and they have one purpose and one purpose only. These buckets over here are for growth and only going to do growth things, if you will.
Right.
So that will relieve some panic.
Paychecks and play checks.
Ooh, I like that.
We do that a lot.
Yes.
Paychecks keeps the bill, keeps you looking up, going, how am I going to pay that bill? No, that's how you allay those fears, right? If you've got all of your basic needs covered, Social Security, pension, some sort of fixed income, anything that covers those bills, it gives you the permission to have play checks. And that's what people are looking for in retirement. They want that permission to go do the things that maybe they've pushed off while they've been working.
That's a great thing. And I think another, not to continue to ramble on your question, but I think of late over the last 5 years, building in inflation into your retirement.
Absolutely.
So true. Great point.
When people know that they're going to be getting a raise every year through their various sources of income strategies, huge reliever of stress in retirement. So there's several. We just randomly fired them at you, Cynthia.
No, it's perfect. I'm glad that you did, because obviously talking about planning for good and bad markets, having a plan that's going to absorb anything that comes your way. And Jordan, you and Adam are so passionate about helping people retire with confidence and clarity. I'd love to spend some time talking about the RIPT report, if we could, before we take our first commercial break.
Yes, absolutely. The RIPT report is our definition of a financial plan that we put together. Adam has a copy here. That these are financial plans that are specific to your situation. We use this little acronym RIPT, which is risk, income, portfolio, and taxes. So number one, the risk. How fast or slow are you driving your portfolio? The faster you drive it, the more money you can make, but you can also lose that way. Make sure it's in line with your comfort level, right, Adam?
Absolutely.
The I is an income plan. We talked about that in this first section. Do you have a written plan? Is it a roadmap? What happens when life comes at us in different ways, with taxes, eroding factors, healthcare, all these things that pop up? The P is portfolio health. What sectors are you investing? What are you paying in fees? How healthy is that portfolio? Let's stress test that thing. Make sure it won't crack under pressure.
Is it active or passive?
Ooh, is it active management or passive management? We'll talk more about that in coming segments. The T is taxation. Do you have a plan? 90% of people or more, don't quote me on that, don't have any sort of tax plan. At least the people that we come in our door as new potential clients.
I'm quoting you on
All right, quote me on it. Put together a tax strategy so that we can get Uncle Sam out of your pocketbook. We've got several ways to help you do that. So if you come in for 2 meetings out of your life, we'll give you a personalized written financial plan. We'll also give you a copy of our new book here, free of charge, A Main Street Millionaire, How Real People Build Real Wealth and Keep it. 300-page a book that is a great financial planning guide to help you navigate into retirement and through retirement. We have 5 offices around Metro Detroit. We have our headquarters in Brighton, where Adam and I are mostly. We have Northville, Troy, Bloomfield Hills, and Ann Arbor. We've got great advisors at all those. So give us a call. We'd love to see you at one of our places.
All-star advisors.
Thank you so much. Adam, thank you so much. To our viewers at home, this is your opportunity to call in to book that consultation. 844-RIPPED-YES. That's 844-747-8937. You're calling in today to book that complimentary consultation to have your very own ripped report designed just for you. Remember, there's no obligation. It's complimentary. Click the QR code at the bottom corner of your screen. That's the fast track to get on the schedule at Main Financial Group. We'll be right back momentarily talking about the number 2 fear that people bring up most often, taxes. Stay tuned. We're going to do a deep dive when we return.
I was an accountant by trade out of school, out of Michigan State, and I absolutely hated brokers, financial advisors, whatever they wanted to call themselves. I was a tax accountant, and we would share a mutual client, and this broker would advise our mutual client to buy, sell, and never do any tax strategy, and I was left to clean up the mess. So I went to the client and said, please talk to your broker and tell him to knock this off or begin to do some strategy, and the typical broker response was, I'm not licensed to do that. I can't talk about taxes. So I basically decided to get my investment securities license and all my other licenses out of spite so that we could do all the tax planning as part of the investment strategy for our clients. The value of choice, as we always say, if you go to a big box firm, they're going to have one of 6 portfolios, let's say, and you're going to fit into one of those. The value of working with an independent advisor, especially a fiduciary like we are, is that they have to do what's in your best interest, and they can use any program that's licensed out there in America, so a huge difference. After 20 plus years on this side of the fence, I think our industry does a poor job at explaining to the public the difference of those two. I come from a culture of helping people and educating them, not just telling them what to do. So I think people that truly want to educate make a big difference in this industry.
Absolutely. Welcome back to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main, and he's president of Main Financial Group, as well as joined by Adam Freund, partner at Main Financial Group. We're talking about the top 3 fears that people may feel as they're entering the retirement years. We're going to talk about taxes in this next one because we know a lot of you have feelings about taxes, and maybe you'd like to have some light shed on those fears. So, gentlemen, it's a big one to talk about taxes. A lot of people don't like to talk about it, but they seem to be surprised sometimes by taxes, retirees, if they don't watch the show. If they watch the show, they know.
Oh boy, do they know.
But if they're tuning in for the first time, taxes can be surprising and it can be fearful.
Yep.
Right. I think tax deferral does not mean tax elimination.
Yeah.
No.
Right. So many people think, oh, I'm putting into a 401k at work or an IRA and I've deferred taxes, and they equate that in their brain to they've eliminated taxes, but quite the opposite. You've now developed or put into play an IOU to the IRS, right? And we call those things, those little guys, tax bombs, right? Oh boy, he's got a tax bomb right here. So the issue becomes there isn't a defined exit strategy out of these retirement accounts for people, right? You work, you're here in Detroit or Ford, GM, Chrysler, I don't know what they call themselves now. Stellantis. And you put all your as much as you can every 2 weeks into a retirement plan, and there isn't really an exit strategy except, okay, I'm just gonna start pulling money out. Well, how is that taxed, Adam?
Oh, that's taxed as ordinary income.
100% of every penny in your IRA or 401k is taxable to you as ordinary income. You can't deduct a capital loss inside of your retirement account.
Nope.
You can't get friendly capital gains taxes.
Nope.
It is ordinary income. So we are developing future tax issues every time we defer taxes out of our paycheck. So which is okay to defer, but put a plan in place, an exit strategy for retirement.
Right.
Okay.
And waiting and keep waiting and waiting, as Jordan said, that's avoidance, right?
Yeah,
You're not kicking the can down the road. And what people don't seem to understand is the more you grow your IRA account, your 401k account, Uncle Sam loves it. It's the greatest trick ever played. They've talked about that before.
A movie was made about it.
There was a movie that was made about it. And the issue is that the higher you grow it, people used to think when they first came out with the 401ks, oh, we're going to get rid of pensions. We're going to put the responsibility on the employee.
Right.
Let them choose mutual funds. And let the account grow because you'll be in a lower tax bracket when you're older. Well, the problem is, and that maybe you'll earn or make less money. You won't need as much money in retirement.
Oh, that's
the problem is that is not true. You have created a tax bomb.
And you need more money than ever in retirement. A lot of your deductions have gone away in retirement. Kids are no longer there. They're good deductions. Maybe you paid off your house, that deduction's gone. Maybe you're not giving as much to charity because you're not working. Those deductions are gone. So you have less deductions and things cost more. Let's just whoever would have thought that in today's day and age, $100,000 retirement account retirement income is really just getting by in a metro city like Metro Detroit. Right.
Crazy.
$50,000, forget about it. You're one step away from welfare type of living, and 15 years ago, $50,000 for a retiree was a good income.
Oh, absolutely it was.
100%.
Yes. So when you think about it, what is really catching people off guard once retirement starts? What tax issues? I would assume maybe RMDs would be one.
That's number one that would come up right away. People don't plan for RMDs. What are RMDs? Required minimum distributions, age 73 and up, depending on when you were born, the year. The IRS makes you start taking money out of these little bombs right here so that you can pay your tax. And if you don't plan for that, it could trigger a snowball effect, right? So do we pay taxes on Social Security on the money that we bring in?
Most people do.
Yes and no, right?
Yes and no.
Social Security is only taxed based on your other forms of taxable income.
Right.
If you don't have any other forms of taxable income, you don't pay any tax on Social Security. Your 401k IRA is taxable income, so it'll trigger tax on Social Security. What about Medicare, IRMA charges?
Same thing.
Or surcharges.
Two-year look back. So think about somebody goes in and their Medicare has been pretty even. Now they hit RMD age. And suddenly they have to, that's earned income, right? And now the Medicare says, well, wait a minute, you're earning more, so therefore the prices of Medicare goes up. So there's a lot of things.
It can be significant.
It can be very significant. So there's a lot of things that we do in our office. One of the things that we promote is it's not just doing taxes for people, it is tax planning, looking forward, trying to figure out this path, this roadmap that we're all on. We talk about diversification all the time, but there's diversification in taxes too, right?
Oh, absolutely. We've got great software called Holistic Plan, and we even more softwares behind that. We upload the tax return of our client, and it will allow us to extrapolate all kinds of different avenues of converting dollars to Roth. What will that do to Medicare? What will it do to Social Security? Running out a 10, 20, 30-year map of how are we going to orchestrate all of these taxable points. And so, I swear, most people that come to us as new clients don't have any tax plan, and that's okay. So for those of you at home, don't think you're out of the ordinary. Most people don't do a tax plan. We specialize in those strategies.
And can I just say really quick, the two things that you got to take away from this program is income planning and tax planning. Those are the number one and two things that we find all the time that people have not planned for.
Yeah, if your advisor is not talking to you about distribution, which is income planning, then Call us now. Even if they are talking to you, call us anyway. But it is so important, distribution planning and a tax strategy.
Yep.
Jordan, thank you so much. Adam, thank you so much. To our viewers at home, there's a number for you to call on your screen. That number is 844-747-8937. 844-RIPPED-YES. What you're calling in for today is that complimentary consultation. Have your very own RIPPED report customized just for you. Remember, this is not a booklet that you're handed when you walk into the office. This is actually a consultation where you get to sit down and design your own retirement plan, your goals, your dreams, and your hopes, so you can make sure that you're in perfect shape for retirement and alleviate these 3 fears that we're talking about today. Once again, 844-747-8937, or click the QR code at the bottom corner of your screen. We'll be right back on The Main Money Show, where Wall Street meets Main Street. Stay tuned.
Did you ever think your retirement would be shared with the government? It's true. Your 401k, IRA, pension is in partnership with Uncle Sam, and he wants his tax dollars and you have them. With our latest tax calculator, you can see exactly what your tax liability will be right from the comfort of your home. Plus, learn if converting some of your savings into a Roth IRA could help keep more money in your pocket over time. Just visit maintaxbill.com.
Jordan, I got $1 million saved in an IRA. I'm going to give it to my kid.
Why would you want to give your kids a tax bomb? What? Have you heard about Roth IRAs? Rothify your retirement.
Well, how do we do that?
Visit maintaxbill.com for the answer.
Welcome back to The Main Money Show, where Wall Street meets Main Street. We are talking a lot today about the 3 fears that people have in retirement. And this next one, we're going to dive into mistakes. So many people are afraid of making mistakes and not having enough time to correct those. So this segment is just for you. So Adam, let me ask you, why does the fear of making a mistake feel so intense in retirement?
Well, I think, first of all, regret is worse than volatility. Making a decision based on emotions and then realizing later, oh my gosh, that was a mistake. I just met with somebody not too long ago that has been kicking himself because for the last 5 or 6 years, he's kept the majority of his retirement in a bank account. In a bank account that's only earning 3%. Now think about that and how much that would have grown, even with the loss in 2022, how much that would have grown if he had some sort of discipline, some sort of plan in place. He would have been a lot better off.
We had someone that came in, and the lack of a tax planning is why he came in. And he said, at this point in my life, taxes or a tax plan is more important than investment return. And I said, well, tell me what you mean by that. This is him talking to me, the potential client talking to me. And he said, well, if you're going to make me 6 or 8% or 10% or whatever it is that stock market does on an annualized basis, he said, that's nothing compared to a bad decision that cost me 35% in taxes. Very high net worth individual. And I said, boy, that's a great way to shape things, that when you're in retirement and at a certain net worth, all of a sudden, tax planning could cost you a lot more than you would make in the market. Does that make sense what I'm saying, Cynthia? So he's saying, well, I might make 8% here in the market, but if I don't have a tax plan, I may lose 35% in taxes because my income is out of, not in control.
It's out of whack.
So I thought that was an interesting spin on a fear. It was a different type of fear.
Absolutely.
And something that really in the past we've never come across until this comes, and now we're starting to think about it. I also see a future story in another book.
We haven't even, this hasn't been a year yet, Adam.
I know.
I think another book would be great.
I do too.
I think you only retire once, right?
Absolutely.
And that is when people look at mistakes, to say you have less time to recover. What was the slogan you had? Regret being more. You were just talking about
regret being more painful than volatility.
Right. So, you have the up and down of the market, but there's also regret of, as he said, the gentleman who kept all his money in the bank account. So
fear of missing out.
You can't just put it under your mattress. You've got to have a plan, and a good strategy makes up for that.
Sure. Well, what kinds of mistakes do people worry about the most? What are you hearing?
Well, I think the mistake, the number one fear is, am I going to run out of money? That is always the number one fear. The number 2 fear is something about healthcare. especially long-term care.
But no, that's the fear. But I think your question was actual mistakes.
Yeah, mistakes.
Right?
So the mistake is that they didn't plan in enough time. They didn't, somebody wants long-term care when they're 85. They're not thinking about it when they're 65.
Right.
That's a mistake.
How about poor withdrawal order?
Yeah, there you go.
What about that? You've got all these different buckets of money, 401k, IRA, when you're going to take Social Security, pension, when you're going to turn it on, Roth IRA, after-tax savings and brokerage accounts. What do you take out of when for your income?
That's true.
Because certain ones trigger different types of taxes. Some are tax-free, some are capital gains, some are ordinary income. So not having a distribution withdrawal plan is a big mistake that I see when people come in.
Yes, and there was an old saying that something about a good scare is worth more than good advice.
A good scare
is worth more than good
I like
advice. So, you go to the doctor says you need to lose weight. Yeah, you need to lose weight. Yeah, you have a heart attack. Guess what you're doing?
You're losing weight. Yeah,
you're losing weight.
That's true. And I think that goes for a lot of people that are buy and hope.
Yep.
You hear the buy and hold. The people that just want to put their head in the sand like the ostrich and hold on to what they're going to do. And that leads to not controlling their income.
Yes.
Another mistake that we see. So these are all mistakes that we see. Take control of your income. Put a strategy in place, both for income and taxation. As Adam said a couple segments ago, income, distribution plan, and tax strategy are
paycheck, play check.
Ooh, paycheck, play check. I like that. And I think the last mistake that I made a note here on that was overreacting to short-term things in the market.
Yeah.
We've seen a lot in the last 3, 4, 5 years of big dips up and down in the market and people reacting quickly to it versus having a nice diversified investment discipline.
I'm a big dip.
You are a big dipper.
Well, Jordan, only a little over a minute left of the show. Please talk about the RIP report and your book when people come into the office. Yeah,
it's as we stress it so much in this show, come in and actually we'll help you create your own written financial plan. Make sure your risk is in order, we're in line with what you want. Make sure you have an income, a distribution plan. Make sure your portfolio is healthy. It can't just be in the mattress. Make sure it's growing, but growing at the pace you want. And lastly, the tax strategy. Let's put a tax strategy in place. Get Uncle Sam out of there. We'll give you a copy of our new book, a free copy, free written financial plan. Come to one of our 5 offices. We'd love to see you.
It's free.
Thank you, Jordan. Thank you, Adam. To our viewers at home, once again, that number to call to book that consultation, 844-747-8937. You will have a beautiful written ripped report designed for you and also a copy of Jordan's book, The Main Street Millionaire. Be safe, be happy, and be blessed. We'll see you back 1 week from today on The Main Money Show, where Wall Street meets Main Street. Take care.